Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? Hope all is good. Welcome to our show. We are financial advisors here at Jazz Wealth, and just doing a little work around the place here. You guys ever heard of the Savannah Bananas? It's a baseball team, kind of a fun baseball team. Cody's trying to get up to a Savannah Bananas game, and I don't know. Maybe somebody's been, and they have some nice things to say, or maybe not. I don't know. Is it worth it to go up there and see the Savannah Bananas? Anyways, we're here to talk about the stock market, not bananas or baseball. So let's get started here. Pullback day, huh? How awesome is that? Finally, a real sign of consistent weakness. And I made the title of the show, Tech Stocks Giveth and Tech Stocks Taketh, because they're the only reason for the market going up yesterday and down today. It's actually pretty straightforward. So yesterday you had Microsoft, very strong day and closed near the highs there. Today it basically erased all of it there. Apple, almost the same thing. All of yesterday erased. What's that tell you? Like if you're looking to invest or you're looking to trade, it tells you it's a tough time to start new positions. I've been saying that for a week now. You see the markets go up and you go, oh man, I missed out. You know, this is going higher. But then today, where you at, right? I had some clients yesterday. They're like, oh man, I want to get some money in and I missed out on the gains and everything. And then today, silence, right? Nothing. I mean, I could have taken the day off. There was like nobody that was like, hurry up. So that's what you had. And really, like I said, it was led by those big names. So if we go back here, look at like Alphabet, erased all of yesterday. It's as if it didn't happen. Amazon's got a lot going on right now, but Amazon erased all of yesterday. It's as if it didn't happen there. So you got a big tech reversal, which pulled the markets lower. Never mind the fact that basically all of healthcare was positive on the day. All of consumer staples, consumer defensive, however you want to say it, was higher on the day. Almost all of real estate was higher on the day. A lot of financials were higher on the day. Utilities, every single one of them was higher. Aerospace and defense, most of those were higher. Restaurants, most of those were higher. Car dealers and parts. Carnival Cruise, right? Also higher on the day. But that's not enough, right? Because these stocks, your Apple FANG stocks that you're familiar with, they move the market. And that was the lesson yesterday. That's the lesson today. And you can even zoom in a little bit. If you don't like looking at individual stocks, you go, how about the tech sector? The tech sector is one of those that moves the market. It makes up about a third of the S&P. The tech sector has a bad day, so goes the market. It's going to have a bad day. And the XLK, which I'm using here, down 2% on the day. Everything else in the market would have had a 2% plus day in order to make the market positive for the day, thanks to what tech did there. So big tech led the way yesterday, which was odd and continues to be odd because we just watched rates go up, right? Rates are higher, and even today was horrible. Rates are higher than even what the Fed is supposed to be raising rates to, theoretically, if you think of it that way. The Fed's going to be tightening. They made comments today that they're going to continue to tighten. They have to tighten. They want to raise rates. In no uncertain terms, they said rates are going up. We are tightening the United States money supply then. And so what are tech stocks doing here? Why would tech stocks be moving higher? Well, you have this, what we're calling now a bear market bounce. I think Morgan Stanley nailed it perfect the other day. One of their analysts, great analyst, by the way, he said this is ultimately going to be proven to be a bear market bounce. Well, we talked about that. We have an oversold condition. Anytime that happens, typically in a bear market, you get a sharp rebound there. You're coming out of a downtrend, right? Tends to lead to bigger moves there. You have a normal bounce inside of a downtrend, which what hit a bear market there, actually very common there. So you have a recipe for the market willing to take a break here. I will continue to say this is a very cautious area for those of you that want to put money to work. I think you almost have to be not insane, but bored, right? In other words, like on the Notes from Jazz email that I did this weekend, we said, just sit on your hands. There's old saying that traders used to say, like, what do I do? Do I buy something? Do I sell something? SOH, sit on your hands, man, because it keep you out of trouble there. So the other thing we have is economic sentiment, as done by the AAII and a couple others, a couple colleges, have proven that the sentiment among American investors is the lowest ever, meaning you guys are bearish. You guys think the market and the economy is going lower, and maybe you're right, maybe you're wrong, but it is officially the worst sentiment we've had. How can that be? Everything looks so good, right? Everybody's happy. The market's going higher. How can that be? Well, there's a lot of little things happening under the surface. If we look over here, if we look at logistics, a lot of people like to look at transports, or I'll say logistics because that's sort of new age way of saying it. Transports in general tend to lead the market, do they not? You ever heard of Dow theory? Very popular. But here's the railroads. We have an unexpected sharp decline in railroad transportation, meaning the need for car loads to be transported. Where's all the goods? I thought we had this oversupply of goods heading to our supply chain. Well, that's not the case if you look at railroads. Railroads actually are seeing less business and already starting to get weaker. If you look at air freight, this is same thing as railroad, but in the sky, not on the ground. It's the same thing. Sharp decline and continued decline there. If you look at trucking, which is in between on the rail and on the air, right? So we got trucking here. It's the same thing. Sharp declines. And this is just recent. This is not like over the last year. This is actually very recent. So kind of interesting there what's happening. So we have rails, air freight, trucking all getting a little bit weaker. In other words, we have transportation stocks getting weaker. And if you follow the Dow theory, I'm going to try to show this to you here. If you follow Dow theory, they say that transports will lead the industrials lower. All right, so I'm going to just change this chart up a little bit, and we're going to zoom out. Let's go like this. There we go. So here's just kind of a zoomed out look at the transports, which are in purple, and industrials, which are in orange. So look at what's happening if I zoom in here. Ta-da. You got transports already moving lower, right? They tend to lead industrials, right? So think of it as the transports bring the stuff to the industry to make and sell and do all that stuff. If they're not bringing as much, then industrials that want to make that stuff to sell obviously don't have things to make. So we've got a little divergence here. Now, to be fair, when we're talking about Dow theory, I'm being a little bit dramatic, right? So Dow theory is more about the divergence between transports and industrials. It's not so much that one is heading lower, one is heading higher or whatever. It's the spread between, right? When that spread gets to be larger, maybe before 2020, you see that large spread where transports start to slow down, industrials are still going. What's going on? You can't be transporting less stuff to industrials and they're going to keep making more stuff. They're going to run out of stuff. All of a sudden, in that case, everything took a hit. But you get what I'm saying there. So divergence is really the focus. But there's another sign of weakness. So that's kind of outside of the normal things that we talk about, and just trying to show you different ways to look at it from a data perspective. Anyways, if we look at the charts here, going back over to, well, let's go to bonds. We look over here at bonds. Holy cow, right? Sharp move lower. In other words, rates just hit new highs. So if you're out there shopping for a home and everything, you just, it just hit new highs, like 2018 type levels here. And that's because we had a Fed president out today that was saying anything and everything it takes to get inflation lower, we will do. He said that raising rates is needed, necessary, and will happen. So don't blame it on them. They're making it very, very clear that all that excess money that's in the market right now, that's in the economy, that's floating around your neighborhood, it's going to dry up because it's going to get more expensive to borrow and people will have less money. I'm not a doom and gloom guy. I'm just saying this is a normal cycle in the market. We are what's considered late cycle in the overall economy. I think most analysts would agree with that, or if they haven't already. Crude oil has also pulled back a little bit today. It's a choppy mess. I don't have any new comments on oil, energy stocks, nothing there. It's kind of somewhere you look away from for a little bit because it's messy. Same with gold. Anything gold related besides Newmont, you probably aren't finding the best of ideas and new thoughts there. So that's what you have going on around the market. Semiconductors were the weakest industry here today. So think about NVIDIA, Broadcom, Texas Instruments, Micron, AMD, you know the names, all very weak today. Transports were also weaker. That's interesting. Transports, I just showed you that. They're getting weaker, which means what? Industrials are likely next. And they're kind of following already a little bit. So all my Dow theory people can rest easy that I covered that correctly. Otherwise, to the upside, just a few things. You got utilities, but what do you do here? Do you chase it? It's already up all this just in this last sort of month and a half here. You get this huge move. In fact, in utilities, with rates rising, which is normally the opposite of what happens, you got almost a 20% move there. 20% higher. Now do you chase it? I don't think you do. Healthcare, that's probably the one area where you have some shining stars, right? You have a sector that's not extended. You have stocks that are not extended and are starting to wake up just a little bit. But that's pretty much all I have to bore with you there on that one. As far as office trades, well, actually, I left the thing up here. I'll just show you. So this doesn't really give you the positions, so I can't get in any trouble. Here are all the tickers that we have positions on. You could probably figure out what the positions are if you looked on over in this column here. However, I'm not allowed to say publicly. We have a bunch of different positions on, and what's really interesting, so if you're in our office trade research site, Office Trades, right? We're not interested in just picking stocks or being some sort of magical person there. We're interested in building a package that we can profit from. As the market has its ebbs and flows, we want to pick off pieces of it, the winners and losers and all that. And so we need to know, as this portfolio that currently holds 19 positions, sorry. How does it move as a whole when the market goes up? What will we be able to take off? When it goes down, what will we be able to take off? So there's a really cool visual way to show this on this little guy right here, and that's as big as I can make it. I'm sorry. Maybe I can stretch this out a little bit for you. A little bit more. So we basically take the whole portfolio and visualize it. Here's the market as it stands. If the market goes higher by 2.5%, we're going to lose some money, quite a bit. We're going to lose faster and faster if the market goes higher. If it goes lower, here's the cool part. We start making money, but isn't there a crest to how much we can make? Imagine if you knew that about your portfolio, that there's a moment in time where the optimum profit could be taken. That's what we like to focus on here. So this isn't like, stock pickers class and I somehow am better at picking stocks than everybody else. No, I'm better at building a portfolio where we can identify the maximum amount of profit that we can make. Right? So we'll be covering that tomorrow as well in our office trades every Monday, Wednesday, and Friday. Research site, if you want to join us, jazzwealth.com/research. It's $13 a month. All proceeds go to support Drum Corps International for the upcoming season, which we're really excited to be a part of. And so, we're not doing this to make a ton of money or anything. We're just there to help teach and maybe see if you can make a few dollars. Okay, so we're on to new highs and new lows. I wish I had something great here. You got 42 new highs, 8 new lows, and of the 8 new lows, 4 of them were home builders, right? So we've already talked about home builders being the least expensive industry in the market. Now you just have to find your gutsy moment in time if you're going to try to buy them. Dr. Horton hit new lows today. Lennar was another one. These aren't great stocks to buy. Don't get me wrong. I'm not saying go buy these. I'm just saying they're the cheapest, right? Valuations we talked about last week, they're the cheapest. Pulte Homes also in the mix there, and NVR just hit new 52-week highs or lows. Would be the most extended out of all of them, I believe. Out of the list, at least I have for you today. Walmart also hit new highs, but started to reverse again. What do you do, right? Consumer staple stock that is getting stronger. People realizing that, hey, the market is not what I think it is. Maybe I need to be a little bit defensive in my positions with some consumer staples. Been a popular area this year, and it hits new highs, but you can't chase it, right? So very tough one there. Paychecks also hit new highs. It's extended. You see why I put these on the list? The moral of the story is anything on new highs, if you're looking up new highs, there's 42 of them, they're pretty much extended to the point where you can't do anything. Normally, you see me, we use the new highs and new lows list to find ideas. Then in the office trades, we trade them, we have some fun, we add them to our portfolios here at Jazz. I don't know what to do. I don't think you can do anything. Utilities. Here's Duke. It's at new highs. Utilities, one of the better performing sectors, not only today, but now coming up on the year. Do you chase it? I don't know. I have a hard time with that. Southern Co., same thing. Very extended area. So I would use the new highs and lows list today to be more of a warning, right? Instead of maybe an idea. Some of these may get extended, maybe not, but I can't give you anything great to work with there. All right, moving on to stocks in the news for the day. We are flying today. Amazon. Like I said, they got a lot going on in the news here they're trying to take the focus off the unionization of some of their warehouses. They've partnered up with a handful of different rocket companies to send some internet satellites into space. They're going to spend a lot of money on this. What was it, $3 billion? Somebody can adjust me on that number, but it was in the billions. I believe it was $3 billion. And they're going to try to compete with Elon Musk over there with Starlink. So they're a little behind the game. Speaking of behind the game, you got General Motors. General Motors is going to partner with Honda because they have to try to develop a more affordable electric car, right? If an affordable electric car were able to be developed, I would have thought at least Elon Musk would have teased it, right? So they've got an uphill battle here, but I'm sure the more competition that gets in there, like anything else, the technology will come along and hopefully they can figure something out. Starbucks is working on playing the NFT game. And hey, who can blame them, right? I'd like to sell nothing for something. So Starbucks says, we're going to try to sell nothing for something. We're going to do that. If everybody wants to spend money on that nonsense, we're going to do it. Twitter, also a little bit higher. Elon Musk bought all those shares. We found out he owned all those shares yesterday. Today, it is now known that he has a board seat. I don't know what type of impact he can have with the time that he has available, because it is him that has the board seat. So I don't know. I think this seems like a little bit of a game at the moment, but nonetheless, the stock is very much extended here. We actually have it short now in the office trades segment. So I'm biased, right? I just be honest. Square, also in the news there, they gave some information that one of their former employees actually maybe stole some information about clients using Cash App and maybe a few other things in there. So I don't know if it's means that you've been compromised, but any of that information, of course, could be an issue. And also, I want to just point this out here. This is a cool story. I've mentioned this before. Spirit Airlines, end of the day, get a big pop here. It's up 22% because JetBlue apparently is looking to buy them, $7.3 billion. Remember, this is what happened. It's a fun story. So first, the guy that now runs Frontier used to work at Spirit. And he said, hey, we should buy Frontier, right? And they said, no, we don't want to buy Frontier. They were worth like $22 million at the time. He said, we should do that. They said, no. So he goes over to Frontier. He leaves his job, goes to Frontier and says, we're going to build this company. Builds it up to what it is now, obviously not worth millions anymore. And then he goes back to Spirit and says, now I'm going to buy you. So he puts in a bid for like $6.9 billion. Well, unfortunately, JetBlue is saying, we're willing to pay a little bit more, $7.3 billion. So that story, that drama, which is cool to follow, I thought it was kind of interesting, is going to continue, and that's why you have that stock higher for the day. All right, so I'll take your questions then, and we can be on our way here because there's a lot going on, man. There is a lot going on out there, but that's okay. It's always better because sometimes you get into the summertime, and it's just boring. We end up just playing games and stuff because people all go on vacation, and I hear you guys all have massive vacations planned this year, all right? I like it, man. All right, let's see. Utilities hitting new highs, not a good sign for the broader market. People hedging more on a downturn. That could be. That's a good way to look at it. Yeah, I think utilities are in a really interesting spot because they're not worth that much if rates stay where they're at right now. If you don't know, utilities are largely debt. Right, so utilities carry 90+% in debt. That's just how they operate. They can get debt. Well, they've been able to get debt cheaper, and it's very expensive business to be in. So rising interest rates hurt their ability to borrow. That's kind of the elementary school definition of what that means. So you say to yourself, interest rates are just hitting these multi-year highs here, which is now a substantial move. It's not like a small move, but utilities are somehow worth more. That tells you, like he's mentioning, that tells you that people don't care. They want to be protective. They want the yield. They're not worried that maybe they're paying up in price because they're going to get the yield over the long run. They don't want to deal with the stock market. Also, volatility in utilities tends to be a whole lot less, right? So something, a little bit of a lesson there. March housing inventory surged in March. People are pulling out of contracts on finance clause. Well, that could be. I didn't see that, but that's you have to expect some level of that, which is not. If you're buying a house, I don't know that you change your mind. Like, right? If you're buying a house, you've obviously committed to. All right, it's going to cost me more, and that's fine. Now it's going to cost you more, but you're going to pay a higher interest rate. But you're not. You're paying twice what you would have paid. Essentially, the rates have doubled. But is it really that big of a deal? If you're staying in a house for the long term, is it really that much of a deal? I don't know that we're at that point where people would would at scale say, forget it. I'm not buying this house. But you do see houses hanging a little bit, especially around here. Yeah, I love it. Oh, also, inversions, right? We talked about the yield curve last week in our Wine and Wealth class. So if you don't know what that is and want the basic explanation, then a really geeky version with a lot of data that's in our Wine and Wealth, also available to research members. And then I covered it in our Notes from Jazz, our weekly email. But we now have the 5s over 30s and 5s over 10s inverted, meaning that when you compare the rate of the 5-year to the rate of the 30-year, you make more money by buying a 5-year bond than you do a 30-year. So do you want to lock your money up for 5 years or 30 years? It's not a good deal either way, but now when you look at that, you go, I don't have to wait 30 years to make that type of return year over year. And the 5 over 10, a little bit more understandable, is inverted as well. The 10-year versus 30-year is within 0.03%, or what they say, 3 basis points of going inverted. And the 2-year over the 30-year is within 7 basis points. 2 years over 10-year, which is where everybody looks, is also 3 basis points away. For all my bond people out there, I don't normally cover bonds. People don't find it too exciting, but I do like to talk about it. Yeah. Dustin, he says, would you consider short the XLU? And we are short. And just to be perfectly honest with you, right? I'll just show you. Here's the XLU. We are short. And I'm showing the short deltas, right? Rather than show the position, because I understand I would get in trouble for showing that publicly. But so would you short it? Yes, there's one where it's like, all right, he's got his money where his mouth is, man. That's just our office account, by the way. We're not short-term traders. I think most of you know that. We just like to have some fun while we're having lunch and such. Yeah. Let's go over here. Yeah. All right. So Alibaba. Well, thoughts on buy now or wait? So all of China had a bad night last night. All of China. So this may not be indicative of Alibaba not wanting to make a low. It could very well be that the broad weakness in China over the last couple nights has stymied the bounce of this. And that's me sneaking back into using bigger words I shouldn't use. So I would say it's a wait and see kind of a thing. Is it that it's like, what NVIDIA, right? Did NVIDIA go lower because the market went lower, or did NVIDIA really have a problem? Well, today we know NVIDIA went down because all the semiconductors got sold off. So it may not be any problem with NVIDIA. You'd have to wait for a day where the Chinese, in this case, where the Chinese market moved lower and Alibaba did not. And you say, okay, cool. Now it's holding up. It has buyers to fight off the broad index level selling that you would see over there. Yep. Got the buy the dip mentality there. What's up with COVID? I think the data's a little off. I think most of Wall Street has assumed, because yesterday we had 1.5 million new cases. Something was off with that. That's probably not accurate. If I had to guess, I bet you that gets revised, and I'm not a conspiracy theorist. Whatever. It's just yesterday we had 1.5 million cases come out of nowhere. But that doesn't make any sense, even if you're saying that it's like this sort of endemic strain, and maybe it's not. No, it doesn't make sense. So something's wrong there, and also hospitalizations and overall ICU numbers, you can see, they're also lower, right? So I don't have the best of data on that one. 1.3 million cases yesterday. So I don't know how you get that number out of nowhere. That would be a massive surge. You'd have seen that all over TV if it was real. So that's just in the U.S., by the way. I'm not talking about the world. So 1.3 million just in the U.S., something's not right. So as we find out about that, I will let you know. I think the sell-off continues tomorrow. I think you have a very good market that could just do the exact opposite tomorrow, right? It's Christmas tree trading. So we have a decent day yesterday, a decent day down today. If it heads lower tomorrow, wouldn't you kind of feel like it's chopping around right in here? It's like Friday. We talked about Friday. Somebody said, what do you think Friday does? I'm like, don't you kind of see a little gap down and then maybe a neutral day? That's what I kind of think. I mean, that happened, but I think tomorrow could easily just be a green day. Looks like it's going to erase, and everybody thinks the world is great again, and so be it. But if bonds have the type of move that they had today, sure, yeah, that's going to make it quite tough, right? Quite tough, yeah. And I'll try to get the data loaded back up again. If that really was, I mean, come on, it can't be that there was 1.3 million cases, but if it was, that means we're going to start talking about COVID again. So I'll load up all the data again so we can show that versus just everybody sitting around having an opinion, thinking we're doctors all of a sudden, because I like the data, right? Can't argue with that, unless you don't believe it. And then you're one of those people. Nothing wrong with that. There's just some people you show data and they're like, no, no, not possible. All right, well, that's what we'll have to go on. Yeah. All right, let me wrap it up, get back to work, do my thing here. You guys enjoy the rest of your day. I really appreciate you hanging out with us here today and joining our show. I know you have other places to watch, and hopefully we added some value to you, help you learn something. Enjoy.